We have with us Mr. Murthy Nagarajan, who is Head of Fixed Income for Quantum Mutual Fund. Murthy, thanks for joining us. The RBI has hiked the repo rates by 25 basis points, something that you had estimated that they would do in the last policy review. So what do you think? This is a good step that has come in at this point of time?
Yeah. Many of the market players were saying that the rates will not be hiked, but the expectation was that going forward he will hike. So what RBI has done is that he has preponed the hike now itself. So what will happen is that the inflation expectation that people are building up, saying that going forward you will see further he will hike, has been preponed. So what is going to happen is the investors will start slowly getting the real rate of return in the deposits. Right now the deposits are going at 8.75 to 9% levels, and if the inflation comes below 9% levels, investors and bank depositors and bond holders will get some real return compared with negative returns which they were getting before RBI was hiking rates, before RBI was not hiking rates.
What does this rate hike mean for the bond markets and the debt markets in general?
The rate hike actually is a good thing for the bond market because the market was expecting that it will hike, which has happened now. So the expectation is that inflation expectations going forward in the next 1 year will come down, and inflation will show a downward path from where we are right now. The next inflation number we expect is around 9.10 to around 9.25 type of levels, and going forward as per the RBI projection it will be around 7.5 to 8% levels by December 2015, which is a good sign because people will start savings now because if the repo rate is around 8% levels, the banks have to give somewhere around 9%, which is near where the CPI inflation is. So which will be good for the saving side also, and people will reduce their consumption and more money will be available with the banks which will be available for lending for productive purpose.
With the budgets coming up, do you see any rates being hiked in the foreseeable future, like before the next financial year, or do you think that the rate hikes will stop now?
My feeling is that there could be another 25 basis point of hike, but like I said before, now it's a very close call whether he will hike rates now, because if the inflation trajectory goes as per his expectation, then there won't be any rate hike, and from next year onwards, maybe people will start expecting rate cuts, because once the inflation number comes to 8, the next number which they are targeting is 6% levels after 1 year. So then the returns will become positive, and people will think that why should we have 8% as a repo rate? It can be slightly brought down to accommodate growth. So which will be good for the economy as such.
Thank you, Murthy.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.